What future do cryptocurrencies have after the fall of FTX? The exchange platform has filed for bankruptcy, leaving thousands of clients in the dark. The immediate fallout was a sharp fall in the digital currency's price. So what does this collapse mean for the industry and its investors? This is Inside Story. Hello and welcome to the program. I'm Hashem Ahelbarra. One of the world's largest crypto exchanges says it's investigating hundreds of millions of dollars of unauthorized withdrawals. Analysts say millions of dollars worth of assets have been moved from the platform. FTX filed for bankruptcy on Friday. It says it wants legal protection as it looks for ways to return money to customers. Former boss Sam Bankman-Fried has stepped down as chief executive. Crypto prices have been sliding all year, but the collapse of FTX stands out. The platform had earned the trust of more than 5 million users worldwide and traded more than $700 billion worth of crypto last year alone. Cryptocurrencies have seen an explosion in popularity since rising to prominence in 2009. Today, more than 20,000 cryptocurrencies are being used. That's more than double those in circulation last year. Some of the major ones include Bitcoin and Ethereum. Last year, they jointly made up more than half of the crypto market. The digital currency emerged as an alternative to money, free from the control of governments and central banks. They run across a network of computers and are underpinned by blockchain technology. But the industry has its challenges. Bankruptcies have come fast and furious since the middle of this year. The industry was once valued at roughly $3 trillion, but it's now worth about $900 billion. Now let's bring in our guests in Los Angeles. Robert Koepp is the Chief Executive Officer of Geoeconomix, a global economic and strategy advisory firm in Singapore. Zennon Kapron is the founder and director of Kapronasia, an independent research and consulting firm focused on the Asian financial services industry. In London, Glen Goodman is consultant to the financial investment platform eToro and author of The Crypto Trader. Welcome to the program. Gentlemen, I would like to unpack with you exactly what went wrong with FTX. And let me start with you, Mr. Robert. What do you think was the main trigger for the collapse of FTX?
Governance, in a single word. It seems that everything started unraveling. Of course, there was a lot other problems going on prior to this, but just a week ago, it was revealed in a report that the FTX exchange had been secretly shoveling funds into Alameda Research, two entities owned by the founder, Sam Bankman-Fried. So that's what it comes down to: bad governance. It seems almost non-existent oversight.
Zennon, so is that a secret transfer of customers' funds from FTX all the way to Alameda, another company owned by Mr. Fried? Do you think that was a traditional case where people suddenly freak out, decide to withdraw their cash, the company cannot really handle the rising demand, and there you go, the same crashing scenario?
Sure. I think, over the past couple of months, we've seen a number of notable collapses in the crypto space. And so I think people were very aware of where there's smoke, there's probably fire. And so even when the first discussions of problems at FTX came up, we started to see customer outflows. And certainly that was a large part of the problem. But one of the biggest challenges is obviously the way that they were using customer funds, because it appears that they were putting it into essentially what banks do to a certain extent with fractional reserve and actually lending it out into much higher risk product categories than we would expect to see an exchange use for something like that. So I think it was a combination of multiple errors, but certainly the outflow of customer funds was not helping the situation.
Glen, in this particular industry, the fact that you try to cushion against any losses, or you're having an issue of liquidity, you transfer cash from a company all the way to another one which you own. Ethically speaking, is this something which is legitimate or no?
Well, we don't know all the facts yet. And of course, it depends partly on the jurisdiction where a company is based. And as we know, FTX is an offshore company. It's not American, it's not European. It's based in Antigua and the Bahamas. So the question over legality will be looked at. And certainly the Americans are sort of flexing their muscles. The SEC are getting involved. Even the Justice Department might investigate. So we'll see what kinds, if any, illegality was committed. But, you know, legal questions aside, in terms of the ethics of all of this, what I would say is it seems like Sam Bankman-Fried had that classic error of doing what Icarus did, flying too close to the sun and getting his wings burned. We saw over the past couple of years, this guy rise from seemingly nowhere. Nobody had heard of him a few years ago. And then suddenly he's on a stage with Bill Clinton, Tony Blair, with Gisele Bündchen. He's being hailed as one of the greatest philanthropists of the modern era. And nobody even heard of him 5 minutes earlier. So, you know, even while I was watching those things, I was thinking, this is all a bit strange. How did he rise so incredibly quickly? How did this exchange become so enormous so quickly? And allegedly, it seems like the answer to that will be using huge amounts of leverage to grow much more quickly than would organically be the case.
Robert, in trying to understand the economics of cryptocurrency, the fall from grace for Sam Bankman-Fried, is this something that has to do with the way he has been running the company, or is it also different actors, particularly the CEO of Binance, who initially said he was willing to bail out the company and then decided, wait a second, I'm not going to go for the deal? Just that answer itself, it triggered this massive reaction.
Well, there's a lot with optics. I like what the previous discussant mentioned, how you've got someone who did kind of come out of nowhere. He does have a Silicon Valley pedigree. His father, a professor, Bankman, is a well-known legal and business scholar at Stanford University. And in fact, that's one of the things that the people now piling on to the company asking for answers are hoping the family might exert some pressure here. But you did have an interesting clash of personalities. So Sam Bankman-Fried, SBF, as he's been known, and Changpeng Zhao, CZ, you had these two guys with acronyms, different personalities. Bankman-Fried was kind of more the relaxed guy. He had testified before Congress. He was seen as the most sort of reputable, I guess you could say. He was easygoing. He speculated he'd be able to buy out Goldman Sachs. Another, just other element to this rise from obscurity into, being the world's biggest bank in the financial world, at least of an investment, was the notion there. But anyway, yes, there was a lot of clash of personalities by, the move by CZ and Binance to simply walk away from the deal without explanation. It did create that run. Again, I would go back to saying, well, that was all rooted in governance. Good points also that, the SEC and others want to get involved because they're realizing what a mess this is. It's a huge mess for U.S. investors, but it's really a mess for global investors.
Zennon, this has all the components of an American saga because just overnight an empire, fortune, and reputation all eviscerated. But when you look at the details, and this is really quite interesting, the clash between the two titans, CZ and SBF, particularly when it comes to the moment when CZ decided that he's going to look into acquiring FTX, looks into the balance sheet, says, oh, there is a massive black hole here. He tweets saying that I'm pulling out. And we know what happened later. Was this an attempt by CZ to undermine the man he has been saying he was backbiting him for quite some time?
Yeah, it would seem to indicate that way. I mean, when we look at how crypto exchanges are kind of proving their balances, there's no simple way of doing it. I think what we've seen in the past couple of days as well, since FTX really kicked off, is a number of the other crypto exchanges claiming their proof of funds. And there's actually some questions about how they're doing that in terms of, we see a lot of large transfers that are moving between crypto exchanges, which could indicate that they're actually pooling funds to kind of prove their reserves, and then they're moving their funds to a different exchange. So indicating a certain amount of collusion within the exchanges. So there could be other things that are happening around there, but this is certainly something that's been there for a while. And as was discussed earlier on, I think when we look at the positioning that FTX had in SBF, he was kind of seen as this remarkable individual in the space, and it's tough for a lot of people to have that proven wrong. But that really seems to be the case, because a lot of the decisions that were made must have been done over a course of time that really caused this to cause these issues and cause the collapse.
Glenn, we'd like to understand, what does it mean when FTX files for bankruptcy? What does it mean for the company itself and for the customers and for the massive black hole of something like $9 billion US?
Well, the first thing I'd like to address is that previous point. The problem is that with proof of reserves, as Zennon was saying, is that you just get a snapshot. So it would be interesting, it would be good to see some of these exchanges showing their reserves in real time. And that was kind of hinted at by CZ, I think. So it would be nice, if we could see it in real time over time, then nobody would be able to do any clever shenanigans to do with moving money from one place to another and then back again or anything like that, because we'd all see it happening. When you just have a proof of reserve snapshot at one moment in time, then obviously, a company, I'm not implicating any company, but I'm just saying hypothetically, they could bump up their balance sheet with certain assets, as Zennon was saying, and then move them somewhere else to another exchange, and then they could do their snapshot. We don't want to see any of that. We want sort of convincing proof. Would be wonderful. As for the bankruptcy, I'll just address that very quickly. This, it's going to be a long process. Of course, these things always are. Work out what assets they've got, what liabilities. We'll start to find out what companies might be owed money by FTX. So then we can find out what kind of companies might actually be in trouble, because obviously the entire market, Bitcoin, everything, all the prices have been pushed right down by the uncertainty of not knowing exactly where all the liabilities are and which companies might be in more trouble than others as a result of having interlinkages with FTX.
Okay, Robert, usually when you file for bankruptcy, there's always this understanding that potentially looking forward to see someone coming and bailing out the company. FTX has a new chief executive, John J. Ray, the turnaround specialist. What can he offer? What can he do except for perhaps asking the Americans to put on more of an aggressive regulatory apparatus to put an end to what's been going on with the crypto land?
Actually, that's probably going to be the long-term impact. I honestly can't answer the question in terms of what's going to happen with this bankruptcy. John Jay is well known for restructuring Enron, and that wasn't much of a restructuring. That's more of a cleanup. We saw this similarly with Lehman Brothers. So often these sorts of bankruptcies, there's so little left that there isn't a lot to necessarily restructure other than to get the platform kind of in order. I suppose the infrastructure and those hard asset parts of the company might be valuable to some others. There apparently was an investment bank at one time. Well, indeed, even Binance was looking to buy out FTX until they found out all these issues. But I think to your point, yes, the long-term implications are likely to be more regulation. So that will probably be the biggest impact to come out of this. The investors who have put their money into FTX, I think they're just wiped out.
All right. Zennon, I would like to see now what would be the reverberations of what happened to FTX across the whole cryptocurrency spectrum. What is going to happen next? Is it still going to be the same fairy tale that has been dominating the news over the last few years?
I think that's the biggest question, is where do we go from here? And I think, when you look across any of the players in the space, it's not good, right? So institutional players that have been moving into the space are likely going to be rethinking things. You have a lot of, certainly here in Singapore, you have a lot of private wealth managers that were moving in and investing client funds into these, and some of them may have been using FTX for custody of some of those assets or for trading. other institutional players that were just seeing what they could do in the crypto space. It does really set us back in many ways. And for retail investors, I can just speak with what we've seen on the ground here in Singapore. Obviously, there have been a number of exchanges, Binance included, that were pushed out of Singapore because they weren't fully licensed and didn't want to go through that process. And so when Binance left, FTX in many ways is very similar in terms of the breadth of coins that they offer and the trading mechanisms and products that are available on that. So many people moved to FTX, and now now their money is gone. So there was a significant retail base in Asia, not just Singapore but Taiwan. Many large part of the losses there were of FTX were in Taiwan, and that really erodes retail confidence. So where we go from here is really up in the air, but it's certainly not a good sign, and it's really kind of pushed the crypto industry back by a period of time. Many people have said years, potentially.
Glenn, if the greatest strength of cryptocurrency was basically this whole idea that a decentralized financial system is going to prevail in the near future and would just put an end to the hegemony of the central banks and governments. But when you look at the very last few days, right after the collapse of FTX, suddenly you have those stories about someone trying to siphon $370 million out of the accounts of FTX. Could be a hacker, it could be an inside work. Then more revelations about the accounts in the Bahamas being used by people all over the globe to try to salvage what they can do. Don't you think that this is something that could push the world to rethink about the way this industry has been going? Because there's absolutely no trust here.
It's so frustrating from, speaking as somebody who's been involved in the crypto world for many years now and believes that I believe that decentralization using blockchains can often be an extremely positive development. It is so frustrating to see the industry's reputation being really damaged by this centralized entity, FTX, a central company run by a billionaire with big ideas. It's like totally antithetical to what cryptocurrency was supposed to be all about in the first place. We were supposed to be getting away from this whole billionaires running things and doing all kinds of secret things that nobody knows about. That was, as you can tell, I find it really annoying. And but ultimately, the silver lining is this was just a trading exchange, right? It's somewhere. It's not cryptocurrency itself. It's the place people go to buy and sell cryptocurrencies, and only one of the places. There are lots of other trading exchanges as well. So yeah, it's frustrating because it was such a big company, and so many other companies were taken in and lent money, and there are all kinds of linkages, and it all has to be unraveled. But by the same token, this isn't what cryptocurrency is for. Decentralized finance is the future, as far as I'm concerned, of people transferring cryptocurrencies backwards and forwards. And that involves smart contracts, not billionaires in charge.
Okay, Robert, on this very idea, I'm just picking up from where Glenn has left, which is cryptocurrency has been describing itself as the path to more equitable financial system, some sort of a far west, a world where you don't have the traditional financial titans taking over. But you end up having CZ and you're having SBF and many others who call the final shots, which is anathema to what they preached initially.
Yeah. Yeah, what Glenn was just saying is totally correct. I mean, but this brings back the whole problem, I guess, is that maybe it's an element in the rest of the world, starting with investors, individuals, institutions, the whole financial system needs to get used to this idea of what we call DeFi, decentralized finance. And that's not easy to do. And indeed, the huge irony is these personalities. I mean, we see this with the notion of big tech, Elon Musk, who hasn't proven to be so genius-like when it comes to managing a relatively straightforward social media platform. Granted, its issues were complex, but anyway, he can revolutionize the auto industry, but he can't manage a pre-existing social media platform. But it all gets back to what we're talking about here, and that is in this new territory, we gravitate to these larger-than-life figures. We want this sense of stability. We're not used DeFi. The whole idea of DeFi, blockchain, distributed ledger, and all the transparency also, again, I go back to governance, the transparency inherent in that means that there has to be this whole notion of peer-to-peer equal exchange, and that it's this hyper-efficient mechanism of capitalism that we're talking about, which just hasn't existed. We've always had big, players, dominance, monopolies, or monopoly-like behavior. And so that's the issue. I think people aren't able to wean themselves out of that old mold of thinking. And so we get these people who then do bad stuff.
Okay, Zennon, in the crypto land, you would have people trading at a volume of $3 trillion US, which has been knocked down to something like $900 billion. Is it normal, or is it an indication of an era that is about to come to an end?
I think this is a much bigger issue, and we're going to see a lot more contagion within the space. There have been, as I mentioned before, questions about the capitalization of other platforms. There are quite a few, not just retail, but institutional players that had money on FTX. So I think, we were already in a bit of a, what you might call a crypto winter, I guess, within the space, but it's going to get a lot colder pretty soon. Because there is going to be more contagion that comes out of this. And I wouldn't be surprised if this isn't the first of a couple of exchanges that we see have trouble for various different reasons. And as mentioned before, I think during this discussion, it's very difficult to tell when the tide goes out, who's swimming naked. In the traditional financial industry, that's fairly straightforward because regulators have a really good grasp of that and maintain and monitor that on a regular basis. But within the crypto space, there's just not enough regulation or oversight to really see what's happening behind the scenes. How they make the secret sauce. And so I think we're in for a little bit more turmoil over the next few weeks, months, and potentially even years on this.
Glenn, it's quite interesting that despite all these problems, despite all this crunch, people would still tell you that they are adamant about the fact that cryptocurrency is the future of finance.
Yeah. I will still tell you that. And as you say, lots of other people will say that. And, the reason is quite straightforward. It's because it hasn't been done properly yet. I know what the dream is. I understand how decentralized finance works, and I've been following it very closely. And, there's a hell of a lot of potential there. It's the best financial innovation that I've seen in, 20 odd years, maybe longer, since really the advent of derivatives, I guess, in the 1980s and then in the 1990s. Those were big financial innovations that caused a lot of problems, but also did a lot of good in other ways. Similarly, decentralized finance, it actually goes back to what Robert was just saying there, really, about people latching on to figures. I guess we're human. We latch on to big human figures who we want to put our trust in. But, we do need to get away from that. The dream of decentralized finance is smart contracts, is code, is people buying and selling in ways that don't necessarily involve human intermediaries and don't rely on trusting in human intermediaries. And from the experiments that have been done so far, for the most part, it has worked out very well. Yes, there are hiccups and some quite major hiccups, but it's all experimentation and it's all going quite well. And just one last point I'd like to make about regulation, just picking up on what Zennon was saying there. We do need good regulation, but it must be good regulation, because there is a danger now with a lot of regulators, in my opinion, not fully understanding how these things work. They might over-regulate DeFi, which hasn't been the big problem, and not do the right regulation on centralized exchanges. So far, we've had centralized exchange regulation in the United States that has pushed most of the trading business offshore. That's why people were trading on FTX based in the Bahamas, because the exchanges that were based in the US, like Coinbase, were hampered in many ways by vague regulation. We need clarity and we need sustainable regulation for exchanges to stay in the main jurisdictions and people to trade in those jurisdictions.
Quite a fascinating story, but I have to admit that this is quite an uncharted galaxy as far as I am concerned, and many other millions of people all over the world. But in the meantime, Robert, Koepp, Zennon Kapron, and Glen Goodman, I really appreciate your insight. And thank you too for watching. You can see the program again anytime by visiting our website, aljazeera.com, for further discussion. Go to our Facebook page, that's facebook.com/AJ Inside Story. You can also join the conversation on Twitter. Our handle is @AJ Inside Story. From me, Hashem, Ahelbarra, and the entire team here in Doha. Bye for now.